Unfortunately, as we enter our 60s, we have to be really careful about a big gotcha that could happen as we sell our home. And whether you're 40 or 50 years old, it's something that should be on your radar screen. So in today's video, I'm going to share what this gotcha is and some of the things we can do to minimize it. And it has to do with selling our house and how it could impact the Medicare premiums that we pay. And unfortunately, it's a 2-year look back when it comes to the Medicare premiums, the additional premium that we have to pay, something called IRMA. We're going to get into it. But when it comes to selling your house, there's an IRS publication. It's publication 523. It's important to know about it. It talks about how many of us can exclude the capital gain in our home for a individual up to $250,000 and for a married couple up to $500,000. So I want to put that out there first. And now we're going to jump to a Charles Schwab article. And the article is called How Higher Income Can Affect Medicare Premiums. And this was just published a few weeks ago as I record this. And Schwab starts off by saying Medicare premiums can jump sharply if your retirement income rises above certain levels, but there's steps that you can take to prepare and help minimize this impact. And the first thing is talking about IRMA. What is IRMA? IRMA stands for Income Related Monthly Adjustment Amount. And it's basically a surcharge based on your modified adjusted gross income for the 2 years prior. And the higher your modified adjusted impact, the bigger your premiums can be. So we're going to talk about what these premiums can be, but they can amount to thousands of dollars a year. And it's based on actions that you took in the previous, if 2 years prior. So Schwab calls this IRMA. Schwab calls IRMA a premium on premiums. And I think that's a good way to talk about it. They share what the 2025 IRMA surcharges are that are applied to the Medicare premiums. They're determined by the recipient's 2023 modified adjusted gross income, which would be on their 2023 tax returns. So here's what the table is. The first column is for single people, head of household, and the second column is for married filing jointly. And then the IRMA premiums impact Medicare Part B and Medicare Part D. Now, I should share, I am not a Medicare expert, but I do want to put this on your radar screen so you can look into it. I'll have some suggestions as to how you can best protect yourself and make good Medicare decisions later in the video. But let's first look at this table here. So for individuals making $106,000 or less, or for married filing jointly $212,000 or less, there is no IRMA premium. So your Part B monthly premium is going to be $185 a month. And then for Part D, which is your drug coverage, that's going to vary depending on the provider. And it's really your health and your zip code, things like that. Again, I'm not a Medicare expert. Okay. Individuals, $133,000 to $167,000, or for married filing jointly, $266,001 to $334,000. The Medicare surcharge is going to be $185 per month. Now, I want to point out that premiums here shown are per individual. So you've got to double that for you and your spouse. So it's an extra $185 a month. For an individual, and then if you're married, both of you are going to pay that premium. And then the Part D premium is going to be $35.30, and then $167,000 to $200,000 with an individual, or $334,001 to $400,000. There's going to be almost a $300 premium on Medicare Part B. In Medicare Part D is going to be your plan premium plus $57,200 to $500,000, or $400,001 to almost $750,000. It's going to be a $406.90 per month premium additional, and then an additional $78.60 for Part D. And then for $500,000, individuals making $500,000, which admittedly is a big number. But remember, we're talking about what happens if you sell your home. Could you have a $500,000 gain on that home? You could. So let's easily, right, based on what real estate's done over the last decade or so. Um, but you can see here for individuals making 500,000 or more, or married filing jointly 750,000, it's an extra 443.90 per month for Part B and an extra 85.80 per month. And again, the Schwab table here says premiums shown are per individual. Okay, so these are the things that Schwab lists some things that can trigger things like this. One is the home sales. If your capital gain from the sale of your home exceeds the exclusion amount, 250,000 for individuals or 500,000 for joint filers, it will be treated as taxable income. So if you made a sizable profit by downsizing, it could show up in your IRMA calculations 2 years later. And unfortunately, what I'm showing you today are the 2025 IRMA premium increases. But really, for people that sell their house this year, they're looking at that impact and really in 2027. And the IRS, the Medicare, doesn't release those numbers yet. So people don't know what the impact's going to be. Schwab also lists a bunch of other things that can trigger you into paying IRMA. And what they say is that the income once we retire becomes more variable. And so income in the year you stopped working could be higher because you're still working. Required minimum distributions, when those kick in, the start RMDs at age 73 could trigger a higher income. Home sales, we've already talked about. Municipal bond income. Interest from municipal bonds may be tax-free for income purposes, but for IRMA calculations, municipal interest is added back to your modified adjusted gross income. Roth conversions become a taxable event, so you want to be careful. You want to be thinking about that strategically. And inherited IRAs, if you start taking distributions from an inherited IRA because you can't keep those for your lifetime like you can your own IRA, that could kick you into a higher tax bracket. So Schwab talks about what you can do. And if you feel you're in a very different situation now than you were 2 years ago, you can request a new determination. You would have to, and they talk about if you experience a life-changing event such as work stoppage, divorce, death of a spouse, disease, or fraud. And Schwab says the form you fill out is SSA-44. You can look that up. And then also they suggest managing your income and just being aware, which is what I want to do. I want to put this on your radar screen. Again, I shared I'm not a Medicare expert, but there are Medicare experts, and today's video is sponsored by one of those. It's called Chapter. And what Chapter does is they help people with 3 really important decisions. They talk to people about when to enroll in Medicare. You don't want to wait until you turn 65 to be thinking about Medicare. You need to do it slightly ahead of time. And so Chapter can help you with things like that. They also talk about how to get the most value from Medicare. They search every plan to help you choose the best one to cover costs that original Medicare does not. And then finally, they work with their clients to help keep Medicare working for you. Healthcare needs and insurance plans change. Chapter helps ensure they continue to have the best plan available to you. So thank you to Chapter for sponsoring this video. Making good decisions and having professionals alongside you is critically important. And decisions like when you sell your house, right? The difference between selling your house when you're 62 years old and capturing that capital gain exclusion could have a very different impact than doing it at 63. So making good decisions is super important, and it's why I made this video here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this one. I'll see you in the next one. Bye-bye.